As we begin our video today, we want to start off with our disclosures. Any symbols that we use today should not be inferred as a trading recommendation. No matter what type of investment you choose, stock, forex, futures, options, they all have a lower risk, and you can lose your money. Any investment decision you make is solely your responsibility. Trade at your own risk. So, this is our weekend wrap-up report for January 8th, 2011. When we look at the key events of the past week, we saw that all three major indices began the year off on a positive note. The Nasdaq's up almost 2%. We started the week off on Monday as the hedge funds began investing money again, so we had a strong start off to the week. We did have 7 out of our 10 major sectors rise this week, led by IT and financials, although financials were a little hit on Friday on some bankruptcy news. A decision came out against them. Wasn't any real overseas news this week. We had CES this week, and the tablet war was on. Everybody's coming out with their own little tablets to compete with the iPad, just like the iPhone. Well, what's the next iPhone killer? They always say that, so now it's what's the next iPad killer. What was interesting is that on Friday, Verizon sent out announced their invitation-only event for Tuesday, January 11th, and it is very widely speculated this will be the announcement of the iPhone finally coming to Verizon. And I think the market has been waiting for this as a catalyst. As far as economic news of the week, we had this great boom on Wednesday with ADP as it came in 3 times the expectation, and then on that raised everybody's expectation for Friday's non-farm payroll numbers, and then there was a disconnect where it was a rise, but it wasn't the rise that people were expecting. And so we did have a little pullback. And then in the afternoon, again, we had the court case against the banks, Wells Fargo and U.S. Bank, on some of the bankruptcies. I believe it's in Massachusetts, somewhere in the Northeast. And so we had a really big slide, 10-point slide intraday, and then we kind of rallied back to be unchanged for Friday. So when we look into next week, we have a couple key events. We have our fourth quarter earnings season kicking off, Alcoa on Monday after the close, and then we have Intel and JP Morgan this week. Not much on the economic front. We do have Michigan sentiment on Friday, but I think as earnings come into play, they will be the catalyst that will move the market one way or the other. Some key points to watch. We're obviously in the uptrend. Buy the dip. Confirmation is we want to close above this week's high. Our high this week was about 1278-ish, so we want to close above that to continue our uptrend. Resistance is going to be all the way up there around 1315, 1316. We are going to go up there. Support right now is around 1250-ish. And our point of interest is going to be that psychological barrier of 1300 as we try to get up there to that 1316 level. Let's go ahead and take a look at this on the charts. Okay, so here we are looking at a daily chart of the S&P 500. And you can see our nice yellow uptrend line here showing how good the market is doing. We did have a little pullback here in August. We had another pullback here in November. And, of course, buy the dips. Certainly, you can see the 50 moving average here acting as support for the market. Also, the blue line here is a 20 moving average that's acting as support for the market. We have our past support and resistance levels. So right now, right here, this line here is going to be you can see it's around 1254. That's going to be our support that we're watching right now as the market continues to move higher. And way up here is our 1320, 1315 target for our next move higher. Now, as we look at the indicators, they're all, for the most part, in the overbought range. So a continuation of this pullback would be great. Perhaps to come down and touch the 1250 level. Perhaps to come down and touch the 20 moving average. That's fine, but we are in overbought levels on the daily charts. When we scroll back to our multi-time frame agreement, we can go to our weekly, and even our weekly now has entered the overbought level. Our weekly time frame has gone overbought. So for our scalpers, we may want to start looking for some trades to the downside. What about our monthly charts? In our monthly charts, Stochastics are just about overbought down here at the bottom. Stochastics just about overbought. Um, RSI just about overbought. MACD seems to be the laggard here. MACD seems to be the laggard. But we can certainly see that a pullback may be in line here on the monthly charts. And just to give you further clarification on where we came up with this 1325, 1316 level is, again, matching up the swing high here, a little bit of the swing lows here. So that's where we came up with our 1300, 1320 price level. But certainly, again, point of interest will be, can we get up to 1300, which will be another psychological boost for the market. So basically what we see is both long-term and short-term, we are basically in an overbought status. So the market may need to breathe a little bit. And then we have our earnings season to be a catalyst to move us either way. Maybe we'll get a little pullback and before some of the good earnings later in the week can, with Intel and JP Morgan, to move us higher or lower. Who knows? As we move on to the education portion of our video using the book Trade Your Way to Financial Freedom by Dr. Van Tharp, we're continuing our discussion about setups. And one of the biggest things about setups is market direction. We talked about in our video last week, lessons learned. And it's the biggest lesson that, everybody has learned is that you trade with the trend. The trend is your friend. And so any system, any path that you're going to take to trading should have a way to identify the trend. He talked about Ed Seykota would put a chart up on a board and walk across the other side of the room. If he can see that it's an uptrend and downtrend, he would trade the market. We know that the market is either in an uptrend, a downtrend, and sideways. And truth be told, we're typically usually more consolidating than we are in a up or a downtrend. Of course, those from the past 6 or 7 months, we certainly have been in an uptrend. So you have to be able to identify what direction the market is moving before you enter a trade. As we talk about in our videos curriculum, the importance of multi-time frame agreement. We talk about it when we do our chart analysis here in these weekly videos. Identify what the long-term trend is, and then on the short term, when it matches up and agrees with that long-term trend, you have a trade. So anybody looking to get in the market first as you're designing your setup, the first part of designing a setup is identify what direction the market is moving. Our resources, you guys know, we're on Facebook and Twitter, and we have our videos on YouTube. Obviously, you're probably watching one right now. We do have a great 5-part video course specifically on high probability trading setups and how to conjure up and develop your high probability trading setup. But we know that a trading setup is not the whole system. And we down here at the bottom, you can see we do actually have a free 8-video series on how to develop a system. So if you want to talk about just how to be a high probability trader, we've got a free course for that. And if you want to talk about a system, no registration required, the CompleteTradingSystem.com. And of course, we have our coaching and videos products that you can use to take your trading to the next level. As you know, our little saying is that it doesn't make a difference about all of the systems and indicators and newsletters that you subscribe to if in the end you're not able to pull the trigger. So we at emini-trading-coach are about giving you the psychological capital to pull the trigger on in each and every trade. Thanks, guys, and I'll see you next time.